How's it going, everyone? Welcome to the weekly trading review for the week of June 23rd. So this is going to be the last weekly trading review for Q2, and I'm going to release the Q2 performance video pretty soon. It's mostly done. I'm just doing some final analysis and some final digging into what went down in Q2 and what do I want to do for Q3. But let's get into the video and more importantly, the results for this week. So, end of the week on a negative profit, negative $845. So that was the second red week I have, and definitely a large amount, actually my largest weekly loss so far this year. So we're going to get into why that is in a second. I had 2 day trades, 0 wins and 2 losses, and I had 3 swings, 2 wins and 1 losses. So just 5 trades overall this week. Pretty low activity week, and kind of an interesting week in the markets. Let's get to that right now. So the prior week I was out on vacation. Market had kind of an odd week with the FOMC, with Juneteenth, and then triple witching. So sort of a strange week. The week prior, on the 23rd, we were in this bearish channel. We got some pop over here, and then the market actually had a gap and go, 2 gap and goes, and then actually managed to continue and keep the gains higher for the rest of the week, closing at a new all-time high on the 27th. And today on the 30th, we kept that level. It was some end of quarter rebalancing and end of month rebalancing as well on today. To end the year so far with SPY at a new all-time high. So pretty crazy. I'm going to get into the M5 chart, or maybe the M15 chart, just so we can see what was kind of going on coming into this week. So that prior week, we had kind of hit a little bit of resistance. The market was struggling around the $600 level. It was pushing up, coming back in, and had sort of stalled out in the middle of June. We saw some selling pressure 2 weeks ago as the market started to make some lower lows and lower highs. So slight bearish channel, but the sort of the medium term trend of the market was bullish, while the shorter term trend was bearish. So you have to be careful. Maybe take a couple of bearish day trades if you want, but you'd have to trade these bounces, in my opinion, to get short. So it's just kind of tricky last week. You're just waiting out for a couple setups to play out. So we got on Monday here this pop up. We tested this low, and we're kind of in this bearish channel here. And we had this 2-sided price action earlier in the day where we made a high of the day, we made a new low of the day, then we made a new high of the day. So some volatility here. Then the market held all the gains on this move, and then gap and go up higher on some positive news with, I believe, Iran. So that was actually the major news over the weekend, given the U.S. had struck the Iran nuclear facilities. So we got this gap and go up. We added to the gains on the 25th, Wednesday. We had pulled back. We had a mild bearish trend day. 26th, another gap and go up, just kind of grinding up higher before stalling. And then on Friday, we had another gap and go up higher, which got pushed. We got pushed down here from some news. There was some tariff-related talks and suspicions that got bought up by buyers, and we finished the day actually on a slight green. So some 2-sided price action over here. There's definitely some news bars and some news pops overall, but I think a lot of the tariff news has been, the impact has been lessened since what we saw in April. And now we're in a pretty big month, in my opinion, in July. I've been saying it for a couple of months now. I didn't think the rally was going to be actually this strong to a new all-time high. That's probably tough to expect after a very deep drop of this magnitude in April. But the market has been very, very resilient. And the place to be, I think, definitively since May 12th has been the long side, in my opinion. Here, you can be careful. You can do some day trades, couple of short-term swings on the long side, keeping it quite nimble. But once we broke through this line of the sand, we tested it and we started to rally up. Place to be was the long side. So yeah, a lot of news coming out this week as well. There is, ISM coming out, unemployment, JOLTS, a shortened week as well with the holiday volume. Next week we have the tariff deadlines, which there was some talk of it being not important. Trump has reiterated very recently that they are going to be important, and they're sending in the final proposals for some companies, for some major countries. Japan and India are in the works. There was some news with Canada over the weekend as well. So some of these major trading partners, we're going to see if these proposals actually end up getting finalized by the 9th, which is next Wednesday. The other thing is that there's earnings as well. The earnings season is coming up. So that's usually going to provide a bid to the market here. See, there's earnings seasons in April. So get through that chunk of news. There's also the big, beautiful bill, which I believe is trying to get passed this week, but we're going to have to keep an eye if it actually ends up going through. That is a potential catalyst to the upside, considering it has a lot of tax cuts. And that is going to be a bullish impetus to the market. So yeah, that's kind of what's playing out here on a longer term basis. I was still market neutral on a longer term basis because we got this deep drop, death cross, huge bounce back up to a new all-time high. Volume has been okay. Like bull rallies, the volume doesn't spike up crazy amount unless you get a super deep drop and we get this volatility. But volume has been pretty decent. The ATR has started to collapse back down to about $6 or so on the 20-day ATR. And on a shorter term bias, right, bullish, especially this week, has been able to go, but I've not been aggressively taking swings, especially here, considering I feel that this move up has been rather steep. And if you look at these moves here, there's been overlap, there's been challenge to the moves going up. So I view this as a little bit climaxy. I want to see what the market does on the downside if it retests this breakout level around maybe 604.50 or 604-ish. Looks like that's probably about the around 604 is going to be that retest. So we'll see if that level holds, if that gap holds. But I do view that there's a much likely chance for this to get tested, and I'd rather see a dip and get in some strong stocks after this dip finds support, just like what happened last week here on June, versus trying to push this at the top here and then getting that kind of, having to hold through a deep dip, especially if I think on a move that looks climaxy where the drop could be severer than I thought. So all that's to say, I'm cautiously bullish in the short term. I've pretty much been cautiously bullish this entire time since, mostly since this candle. It's been more neutral. This has been more bullish, and then it's been pretty decently bullish. There's been a couple of points here, 1 and 2 and even 3. A couple points here where you could take some swing longs. But yeah, so been pretty cautious for the most part. Okay, so let's get into the swing trades that I have taken. First swing trade is going to be, I have the wrong chart up. Here we are. Okay, first swing trade, COHR. I think shout out to Alio in the one option chat. He called this out. I did like this pick, so took it on the 25th. And I ended up taking profits here on the 26th. So COHR. Here is a setup on the 25th. Stock was breaking out of this compression, getting through that 200-day SMA. Really tight compression here, by the way. So that's a much cleaner breakout. And ton of support coming up over here that it had cleared. So there's some support here. 75, the 100 SMA, and the 50 SMA as well. So like that stuff on COHR. I saw it had some resistance around $90, so that was my target on the stock. If we look at SPY on the 25th, it was a little bit down. So I felt that, all right, well, look, market has broken out to new all-time high and held. This is a pretty good stock where I'm close to support, so I feel pretty comfortable taking this on a day that's not the 23rd and maybe taking an overnight swing on this to get a nice win. So it's pretty much what I've been doing. So COHR has been doing pretty well. So let me go to the M5 chart and just talk about the entry that I ended up taking on this guy. All right. So broke through the 200 over here, got this red candle, and then we popped up over here on this 2 o'clock candle. So once I saw this pop up, I felt pretty good. By the way, the 200 SMA on the M5 line was actually closer to here. It has moved up since the line reflects the current day SMA price versus the price it was on a prior day. So I bid, it popped up over here. I bid at 85.32, and I think I got my fill. So I got my fill right over here at the 210 candle, and stock had grinded up higher while the market, while the market was pretty flat, right? Not really doing a whole lot. So match relative strength. Next day, market popped up. This stock popped up over here, and I think I ended up taking profits at around $89 here, as it was struggling at this level, the $89 level, for a couple of times. So, I figured that, all right, well, my target's originally $90, but it's a pretty nice move here. Marcus has another gap and go up today. I've written out a good chunk of the trend, so not a bad time to take some gains. Did end up eventually hitting $90. So it did end up hitting my target. So potentially something I could have held into. You can see how it hit that resistance, kind of rejected the next day, coming back up and testing it again today. So stalling out here a little bit, but had another couple of chances to exit this trade at $90. So it came pretty close, but I think I could probably have pushed a little bit more, maybe another dollar or so. I got out of this trade at 88.82. So definitely had another dollar in this one, but pretty happy with this trade. Overall, was a nice overnight win, and can move on from there. So next swing that I took on the same day, also an overnight swing, was Sezzle, SEZL. So had this nice compression break over here. I really like this. I saw that this stock pulls back the 8 EMA, pops up, has overlap in some of these breakouts. So I bid lower here. It closed, you can see, at 160.12, and I bid a little bit lower. So let's go to that M5 price action today. All right. So so here's where it closed, around 160. Popped over here. I bid at 157.50, which was about the prior day AV WAP if I were to draw it here. So bid at this candle, tested around 154, and then had shot up higher. I did end up taking gains on the 26th. As you can see, the market had rallied a good amount, and this stock hadn't really done a whole lot, in my opinion. So it didn't pop up with the market. It wasn't able to make a new high, so I took a small win on the trade at like 160.92. So I ended up taking maybe $3, about $3 on this trade. Now it did eventually shoot up a lot higher, closer to 180. So did leave quite a bit on the table over here from 57 to 180. But again, we'll talk more about that in the Q2 review video. Right now, I just took the small win because mainly my exit reason was that I just was pretty cautious about the market. I didn't know how much further this could go, and I felt that the chance of a pullback were going to be quite high, given that 2 gap and go days are a sign of a pretty strong trend, and the fact that we're getting this after a really big move just feels very climaxy to me. Okay, so that was Sezzle. The other swing that I took was a swing short on VKTX. So I took this swing short on the 23rd, and I took it at 24.13. So if you look at VKTX, the start of the day or part of the day, it was a long red candle. And more importantly, it had actually gotten below this level of around 24.50, 24.40-ish, right? There's some horizontal resistance here for some heavy volume candles. If you look at the D1 chart, great D1 chart, strong compression break, double top, projecting off its SMAs, breaking down through here while the market is also down. And we have this kind of sort of down day where two-sided price action, market is keeping the channel and then poke down over here. So while the market was going up, VKTX was selling off. right? Market was selling off and then moved it lower. Now, this stock was it was a nice move. I know it's a little choppy, so it's just waiting for a bit of a dip. So I got a bit of a pop in this case. So the strong selling pressure. I got a bit of a pop here at 230, so I went short at 24.13 at this 230 candle, which looked good. Ended up finishing up as this kind of high doji, and then we got this big push up over here where the stock it was relatively weak earlier, but it didn't actually come back and test this level and then confirm off it, which is probably my mistake. It did look like it sort of did here, but usually there's a breakthrough and some visible test over some period of time as it grabs some additional liquidity. So we got this massive pop up all the way over here, and then sell off the next day, testing this level again, another little pop. So you're going to take a lot of heat on this guy before this eventually starts to roll over here and comes crashing down. But I ended up taking the loss on this stock at 27.01. So I took a $3 loss on this stock at the end of the day right over here as the stock had broken through some horizontal resistance, which I was leaning on. And it also had poked above that 50-day SMA and got back into the gap. This was on the 24th. Also on the 24th, market had a gap and go bullish trend day that was pretty strong. So felt that, look, in this case, there was a chance that this goes up. There was also some news on this guy with, so RFK had made something about the vaccines or, something like that. So some healthcare stocks were popping down. VKTX, I think, was popping up as a sympathy play, or like a negative sympathy play, I should say, whereas moving in the opposite direction of news that primarily affects a different sector but has implications for another sector. So there was a bit of some news there. It still looks pretty valid on the D1, I would say. But I just didn't feel like, all right, on a short-term basis, I don't want to be stuck in swings, and this could easily be some sort of double bottom and we push up higher over here. But yeah, I didn't want to be stuck here on a, stuck here on a swing basis while the market keeps running up. My first warning sign was this tail. Second warning sign was that we got some super strong buying off here. So just cut my losses and moved on to the next trade. Okay, that was VKTX. Let's get into the 2 day trades I took. First one, well, not the first one primarily, but we'll do Tesla. We'll save the SPY one for last since that was my big loss. But Tesla will start on the 25th. Take a look at this guy. So market on the 25th, again, mildly bearish day. So have a little bit of market tailwind against me on the M5 chart, but don't have it on a shorter term basis over the last couple of days, right? The market's been pretty bullish. So looking at Tesla here, Tesla, kind of a bit of a mess of a D1 chart. On the M5, we got the super strong move down, and then we got a weak pullback over here to VWAP. So rejects off VWAP here. It's looking pretty good. 325, and then we got this nice break candle right here at 230. I set my alert right here at 324 something ish. Around 324, whatever this low of this compression was. If it broke through that here, closed somewhere like that, then I would get in on the trade. Ended up not doing that. Stock had this nice long signal candle over here. And look, SPY was pretty dead for the day. So we got this nice long, where was this candle here? I entered right around here at 324. So what I've been trying to do in my day trades is just bid a little bit better. So not chase these long candles, but in this case, I could bid at maybe the halfway point of this candle, which comes around the 8 EMA here. Figure that, look, get the halfway point, bid over here, which is a better entry. I save about $1, right, versus chasing this. And right, if I get the right move, I should be able to take a nice $2 on the trade. So that was the setup on Tesla that I saw. I just want to flash the D1 because I didn't feel like I flashed it enough. You can see how the chart is kind of very marked up because there's sort of a lot of little high volume candles coming in here, and you can see that because there's all these little high volume candles, there's all this chopping around here. So you're getting knocked back and forth. There's not a ton of big volume spikes coming through. So that's one area to be sort of more cautious with Tesla. The second thing is we have this downward sloping algo line that's coming up from, looks like December 18th, touching May 29th. So we poked up through here, but then we rejected off this algo line. We saw some selling. So I feel like on a D1 chart, personally, it was in a bit of a no man's land. And it's just, yeah, it's a little bit tough to trade. It hasn't really gone anywhere since this election pop in the past couple of months. Just been oscillating back and forth over here. So, yeah, that was Tesla. I think D1 chart, it's fine. And I know Hari's taken this for a couple of PDSs last week and this week. I think there are better D1 charts in terms of shorts, but it has been quite weak to the market considering the fact that it's been selling off while the market has been going up. So, I think it's a decent pick, maybe not the best pick, but I do love, all right, in terms of the D1 chart, I do love what I did on the M5 chart. And let's just go back to this so we can close out the process of this trade. So I bid over here. We got this pop up. I got over here at around 255 later in the day trade. I got this pop up over here at 3. Long green candle. I'm like, all right, look. So we broke this open, which is not a good sign because we're back in the range. There's a good chance of a double bottom because there is some D1 support coming into this level. And I got this little pop in the market as well. So market popped up, Tesla popped up here, getting some relative strength. Market rejected off VWAP and turned around. Tesla actually compressed and held some of the gains at VWAP. So when I saw this is when I got out of the trade at around 327. So took about a $3 loss in the trade. But overall, I felt like it wasn't I think it was a pretty good trade, I would say. Like, I wasn't too upset about that because this is my process. I got a pretty good D1 chart. I had a clear plan. I had a good M5 chart. I bid better, but in this case, just didn't go against me, and I took the loss when I needed to. So that just is what it is on Tesla. Okay, last trade of the review here is a SPY short I took at around 598.14. So let me get back into this day and explain why I took this short here and what ended up being a pretty big mistake. So here's the setup that I was seeing. Market in a downtrend on a bearish channel. We're chopping back around here. And on the 23rd, we got the news, ended up being a flat open. Moved down over here. We got big selling down over here. And then I don't know if there was some news, I forget, or something like that. But essentially, we make a new low of the day here, which I already thought was bearish, first of all. Then we get this high volume bullish hammer, super high volume bullish hammer, okay? So when I saw this, I'm like, all right, look, we're definitely at least stalling here. I'm like, if it immediately gets erased, then we know we're into some real serious selling pressure. But for right now, we hit this, popped up over here, hit this little double bottom, and you notice the volume coming in on this chart. That's so, like, if you're a little bit more of an aggressive entry, you can take this setup over here, leaning on this support and probably lower as your entry point. Boom, 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 boom. A bunch of stacked consecutive green candles on heavy volume. That move is going to continue, and keep that in mind. So I saw this green candle. I'm like, all right, look, this is a bullish move. We've seen some heavy selling here, so I think there's a decent chance we at least come over here, maybe test VWAP. I can probably get $1 or so on this over here on SPY, maybe $2. So I'm watching this here, and I'm waiting to see if this low on the 150 candle gets erased. If we get a kind of a double top here, compress, and then we chase down here, I think that flush is pretty likely. So I'm just waiting for that trade to play out. So I get this poke right over here at, I believe, 240. Let me see when I get this fill on SPY. To the 245 candle. Yep, so in this candle here is when I go short on SPY because it had poked through this little level here and was starting to break down. Now, this bearish cycle had been diverging, but it hadn't yet crossed up, so I was still good over here. And it was testing this prior high of the day, which was, if you look at this, 598.29. So we're just starting to get through that high of the day. I think a little bit of anticipation trade, but I feel like I had to be a little bit anticipatory because this move could manifest quite quickly. So we got a little poke here. We come back up over here. We get this nice pop over here to test the high of the day. So I'm like, all right, okay, not great. But I felt like, all right, if this gets erased pretty quickly, I should stick at the trade. But otherwise, I'm probably looking to get out because I didn't expect this sort of pop, and this bull cycle is curving up. So we're getting some retracement here. It's starting to sell off here. You can see that this was a clean bull cross, and then now it's coming back down. And then we hold this level again. We hold the low of this candle, and then we start to leak up, hold, and then we pop up a little bit higher to kind of end the day. So at this point now, I'm still in the position. I'm down about $2, right? So it's like about 1-to-1 risk reward here. So I decide, okay, well, I look at the D1 chart, and I make the very rare judgment to actually hold a day trade overnight. And the reason I decided to do this was, if you go back in this D1 chart, so we did have a nice bullish entry here in hindsight, but this was a very kind of a mildly bullish trend, I would say, with a ton of overlap. So if you look at, even if you look at this pop here, right, this pop, it popped up over here, and then it came back down to earth, popped up. There was some overlap over here, and then we kind of got off. So I figured, all right, well, I think I have a chance, actually a pretty good chance to scratch out of this trade, because I'm sure it'll probably it might overlap tomorrow, maybe test the open, poke down a little bit, get a bid here. So I might be able to get out for like $1 loss, or maybe even a 50-cent loss or a scratch. Best case, I could take some profits, but we're really just looking for a scratch or a smaller win over here. We do get a positive news catalyst overnight, gap and go day. So I see the gap up overnight, and I'm like, all right, look, gap up overnight. Let's see if this news holds, because it's a pretty decent gap up. We get a couple of pokes. We push up a little bit higher. This is a weakish rally here, but so far the gap is holding. And just kind of watching this guy move up a little bit higher here. Oh, sorry, that's the wrong one. Here was the gap. My bad. So we get this push up, and we poke to make a new low of the day. This is a tell here. This hammer started as a close here, and if it closed near its low, we had a good chance of filling in that gap. It didn't. Ended up as a hammer. We rallied up a little bit higher, stalled for a little bit here, poked up to the high of the day, and we're just sort of gradually kind of inching up over here. So pushed up a little bit higher over here. And then when the market started to stall over here at around 606-ish, something like that, that's actually when I closed the trade down for an $8 loss. Considering that, all right, well, we had this move here. This didn't really get knocked down too much. I'm just looking to exit better on some sort of red candle. And then I exited kind of in the middle of this compression before I got this lift off, because there was no indication that sellers were going to kind of push in here. And at this juncture, SPY needed to reject and then start to roll over. And when it started to break through this high of the day, right, now I'm just looking to exit and get the best exit. So I got a pretty, fine exit here. So took a big loss. The good thing is that I'm glad I closed the trade out. Imagine being underwater that trade, another $11 on top of that. So would have been down almost $20 on that trade, being on the wrong side of the market. And that would have destroyed my entire quarter with just one mistake. So the good news on the trade is that it was a mistake, but I didn't let that turn into a bigger mistake. This was also the first trade that I took, or I think the second trade. I took VKTX as a short swing, but first trade that I took of the week. And even though I took the loss, I still traded something like CORH or SEZL as day trade longs, and reclaimed some profits back. So didn't let it go. But what were the mistakes that I made? So the first one was just being on vacation and coming back. I think my decision making wasn't quite as sharp, and I wasn't really expecting to make any trades today. But I felt that going into it, most of the decisions in terms of taking the trade were actually not terrible. Like, I think two-sided price action is justifiable. I think the bearish channel is justifiable. And what I was looking for, especially in terms of the intraday price action, was justifiable. So I think all of that made sense. The problem was just deciding to hold overnight did not make any sense, because my risk reward was just not good, right? Risk reward, I mean, maybe it was like here, but I intended this as a day trade, and it should have stuck as a day trade, because if taking it overnight, I have bigger risk and bigger reward. And look, maybe this is like a 90-10 thing where I do get the overlap most of the time and I can scratch out. And this is the rare scenario where I do get hit by news and come up. But I'm on the wrong side of the market, and I don't want to be swinging SPY short on the wrong side of the market. I think that's just a pretty tough thing to do. If I had a relatively weak stock, then I could actually hold on to this. I think actually Hari took like Apple short over here, and he closed it for a profit like pretty early on the gap up because it didn't really gap up. He took a $1 profit in that guy. So just goes to show you that the power of that versus the higher margin for error, or the much more lower margin for error when using SPY. So I think what I should have done is close this by the end of the day on the pop. That's the first thing. Just take the loss here. $2 loss. If I got it right, $2 win. So 1-to-1 on that, and that would have saved me a good 1.5% on the account. So had I done that, it would have taken a really bad week into just a normally bad week. My last red week, I lost about $300. So had I not done that, or maybe taken a better loss, I'd say. I think that's a more fair estimate. That would have turned it into something like $400 loss, which is, again, still a red week, but I don't want to get a massively red week. So I would still save myself a good chunk of money and finish the quarter a little bit higher. But is what it is. Sometimes you're gonna make that mistake. This was probably the worst mistake I think I made the entire quarter, and the fact that I only have one mistake out of the 80 trades I took is a positive. So it's I think important lesson for me mentality wise that I learned. I've taken some big losses before, and they've really sort of hit me hard. So I was determined that, all right, I'm going to take this loss, but I'm not going to let it define the next series of trades. Just really try to move on. And I felt like I did that to a pretty good degree. Even though I took a loss on VKTX and took a loss on Tesla, I didn't feel like I was panicking on those decisions. I didn't think I was forcing anything too hard. So, yeah, I mean, that's what happens. And the last thing I'll leave you with here is since I'm a big tennis player, part-time tennis coach, looking to a lot of professional tennis players and how they handle big losses. And the best ones, they take, even the really great tennis players, they take really big losses, sometimes tough losses, close matches where, they play a fantastic match for 4 or 5 hours straight, and you can count down maybe 4 or 5 points where they didn't execute as well as their opponent, and that is the difference of the match. So there's some fine margins out there, and so they take that hit, but then they respond and they get back to work, and they just focus on the next match, the next tournament, and the next goal that they have, and try to not let it define them. So that was pretty inspirational to me after that loss, because I was sort of pissed at myself for breaking my rule. And I think that was probably the most pissed that I was in terms of taking this, was just that I was a real stickler to never letting day trades turn swing. And then the one time I break my rule, I pay the price. So sort of reinforce that. So yeah, that's the takeaway from all this. But Q2 review video coming out pretty soon. But hope you guys had a good Q3 and are doing well in this market. Tough conditions, but I think lots of learning to be happen, and this is a real trial by fire for anyone who is having a tough time. All right, I will see you all in the next video. Thank you for watching.